The impact of November 2016 demonetization continued to cast its shadow on the Indian economy in 2017. The growth of GDP slid from 9.2% in January 2016 to 6.1% in January 2017. So India lost its pride of place in the world after being hailed for keeping up the fastest growing economy when the GDP growth dropped to a 3-year low of 5.7% in the April-June quarter this year. Speaking in Parliament after demonetization, former Prime Minister Dr. Manmohan Singh had anticipated a decline of 2% in the economy, which turned out to be true.
My own feeling is that the national income, that is the GDP of the country, can decline by about 2 percentage points as a result of what has been done.
In this decline, downward industrial production had a major contribution. After touching a height of around 9% in 2016, the IIP fell below 5% in 2017 and receded to 2.2% in October 2017. The downfall of industrial production totally encompassed India's trade. With limited exports, the increase in imports landed India in a huge trade deficit. This figure reached as high as $1,400 crore in 2017, highest in last 3 years. The international ratings agency Moody's raised India's rating from Baa3 to Baa2 for the first time in 14 years. However, it later turned out that its entire decision was based on mere anticipation. DBS Bank of Singapore, on the other hand, brought down the projection of India's GDP growth for financial year 2018 from 6.8% to 6.6%. And the Global Competitiveness Report 2017-18 released by the World Economic Forum put India a rank lower than the previous year from 39 to 40. Subsequently, both the IMF and the RBI lowered India's GDP growth projection to 6.7% in FY18. In the midst of all this, another major shock for a stressed economy was the introduction of GST, particularly the manner in which it was handled, with goalposts changing every day. Even before the GST was introduced on 1st July, with much fanfare and a specially convened joint session of Parliament at midnight, traders had withdrawn their participation from the market due to lack of transparency in the new tax regime. They were irked by the input tax credit, which prevented the reimbursement of tax already paid on raw material until June. The government, for its part, collected Rs 83,346 crore GST in October, which was the lowest since July. After the twin shocks of demonetization and GST, the government went into damage control mode, but only gave assurances that the fundamentals of the economy were strong and it would bounce back in 6 months. Another worrying factor that took center stage was the ballooning NPAs in Indian banks, especially in the public sector. The RBI's own estimate says that the double-digit figure of 10.2% of bank NPAs will rise to 10.8% by the end of this financial year. And this will zoom further to 12.1% by September 2018. So there's palpable anxiety and nervousness in the air. On the whole, 2017 has not brought any cheer to the Indian economy, and the big picture doesn't look any rosier going forward in the new year.